Hello, everyone. Good morning, good afternoon, depending upon where you're tuning in from. But we are happy to have you here today. We're midway through December. We're getting close to year end. And this group is really excited to spend the next hour with you all. So we're here to talk today about accounting and finance for clinical stage companies. And so thrilled to have my colleagues from Auxilius and our friends from Deloitte here to talk about some of the things that you need to think about as a clinical stage biopharma company in today's market. We're going to be covering today some key agenda items, starting with what are some of the accounting and reporting updates from an SEC perspective, and including segment reporting. What are we seeing in terms of comment letter trends, critical audit matters, and things that you need to be considerate of as you get into 2025. And then we're going to delve into a really specific but material issue for this group, and that's going to be R&D and clinical accruals. So I just want to say hello, welcome. My name is Sharon Langan. I lead up partnerships and community at Auxilius, and I'm so pleased to be joined today by my colleague, Erin Warner-Gwill, who's Auxilius President and COO. Also joining us here, we have the team from Deloitte, and we have BJ Spence, who leads Deloitte's ARA practice in New England, and Tasia Blazevich, who is leading up and managing director of Deloitte's ARA practice, coming out of the San Diego market. Both Tasia and BJ are the national IPO co-leaders for life sciences. So we have a really great group today. We're excited that you're taking the time in either your lunch hour or your morning to join us to talk about these important issues. One thing I will say at Auxilius, we've been doing webinars on an almost monthly cadence for almost 2.5 years now, and it's been really, really wonderful to be able to partner with Deloitte on this specific timing as we lead into year end to talk about what's really material and important from a reporting standpoint. So thank you all for being here. You can see on the right-hand side, you can add in comments to the chat, add in questions, and we are going to be monitoring that throughout the webcast so that we can answer your questions. If not in real time, we'll save them to the end and we will address them as best as we can. So I want to say thank you to Erin, to BJ, to Tasia for joining us today. And I'm going to start by turning it over to our team at Deloitte. And I think, BJ, you're going to kick us off with accounting.
Something that management has had to think about before, and it may require some additional considerations, particularly around capturing data that's regularly provided to the chief operating decision maker or the CODM. And so on this slide, this goes through the requirements, which are for the updated segment disclosures that will be required on an interim and annual basis. And for each reportable segment, expenses that are considered significant and regularly provided to the CODM and included in each reported measure of segment P&L, they're now going to have to be included in the segment footnote. And so really the key takeaway on this slide with the new standard is that the focus on information is that information that is regularly provided to the CODM, even if it's not necessarily regularly reviewed by the CODM. And so the overall focus for many companies in the life sciences industry, it is typically around expenses, just given the significant focus on R&D spend, typically by program. But this slide also does go into some detail to share other examples of other information that are included in the measure of segment profit and loss that may also be regularly provided to the CODM. And would also need to be considered for whether this information would be required to be included in the segment disclosure as well. On this slide here, we kind of go through an illustrative example. There really aren't a ton of examples out there in the public that we would like to see, so we can all sort of benchmark where we are. Especially around similar organizations that either have one segment or in the life sciences industry. So there's just not as much disclosures out there that we'd like, but they are coming soon. So what we're going to do here is just share some information on what companies could expect to see for disclosures. This example shows a single segment company with locations in multiple geographies, and it shows the various items impacting income or loss, which is typically expected to be the segment measure of profit or loss. You'll see here the example of segment assets that's included here as well. But to note about these, they're only required to be disclosed if they're provided to the CODM at a different asset level or category than what is already disclosed on the balance sheet. And so on this next slide, we're going to go into an example of what maybe is familiar to some of you as far as what would be disclosed already in your MD&A. And so while companies may disclose more than one measure of segment profit or loss used by the CODM, they have to make sure that at least one of those disclosures includes segment profit or loss measure that is most consistent with GAAP measurement requirements, which is why we typically see net income or net loss as shown on the screen here. And so as many companies are looking for guidance at this time, what we would recommend is to look at sort of your current MD&A disclosure of R&D expense, which likely would serve as a good baseline for expenses that may be provided regularly to the CODM. And this slide here shows how the typical MD&A expense disclosure may already look for your organization, with further granularity on the types of expenses by program or program candidate. And so management will need to consider information that's not only presented in the MD&A, but also in other external publications, documents, investor calls as well. And considering different costs like R&D spend by product, drug candidate, manufacturing expenses, clinical trial costs, preclinical study expense, for example, and as well as distinguishing between internal and external expenses. And so how this translates into the disclosure, which may look like this, you'll see similarity of information from what is disclosed already in MD&A that may be a strong indicator of what is regularly provided to the CODM, and similarly disclosed in the segment footnote for really the detailed expenses that are impacting income or loss. So as we wrap up this topic on segments and I turn it over to Tasia, we just have two final slides to share with you. This slide discusses the overall timeline, with this standard being effective for the 2024 10K for calendar year filers, and then subsequently in the interim periods beginning in 2025. Further, comparable information that is going to be required in prior periods will also need to be presented, and that will need to be recast to align with the expenses that are in the segment footnote for the current year. So really the key takeaway here is that this guidance is here, and it's something that will need to be reported in the coming months as you issue your annual financial statements. So for the last slide, finally here, we just want to talk through various activities that companies will want to consider in complying with the new requirements of the standard. The information that's on this slide is presented in a checklist format, and it essentially starts with gathering the information that is used by the CODM in review of the business, in combination with what other information may already be discussed or disclosed elsewhere, like the MD&A I mentioned or the external presentations, and then evaluating how this information would fit into the new segment requirements for what needs to be disclosed. And as you go through this process, you're going to want to consider documentation on the overall process that you have in place, along with relevant internal controls that you have, not only over this information, which is going to be important to assess completeness and accuracy and where it comes from, but also in how you're complying with the rules in preparing the required disclosure. And so, Tasia, I'll turn it over to you to talk about the SEC comment letter trends.
Great. Thank you so much, B. And as BJ said, we're very excited to be here to speak with you all today. So jumping right into it here, in order to try to illustrate both the importance of getting the accounting for a company's R&D spend correct and the level of scrutiny put on this from an auditor and SEC lens, we thought we would start by showing SEC comment letter trends across all industries from 2019 through 2023. As you can see, comment letters are on the rise, with an average of 2 to 3 accounting topics per letter being addressed. You can also see, looking at the chart in the lower right-hand corner, that the lion's share of SEC comment letters by filing status is of non-accelerated filers, which, if a company is public, where a vast majority of early-stage life science companies may find themselves. So what is the SEC's focus? What are they focusing on in these letters? So key topics that the SEC tends to focus on at a high level include MD&A, so describing what is going on in the business that is driving the change, not just noting the change itself. Non-GAAP measures. The focus here is really on the prominence of GAAP over non-GAAP measures and the reconciliation between them as to not be misleading to readers of the financial statements. Segment reporting. BJ just touched on some of the new segment disclosure requirements, and with the new rules, we would expect to continue to see comment letter focus on this area and additional granular disclosures as it relates to companies in the life science space. Revenue recognition. So questions on RevRec continue to be a hot topic. Questions around significant judgments, performance obligations, capitalization of contract costs, and disaggregation of revenue. Acquisitions and mergers, so asset versus business acquisition questions, legal versus accounting acquire, allocation of purchase price and contingent consideration. And this next slide shows some additional areas of focus, including internal control over financial reporting. So questions around severity of deficiencies or disclosure of material changes in the control environment. Questions around fair value. So valuation techniques and inputs tends to be an area of focus. Inventory and cost of sales and the nature of expenses included there. And of course, questions and considerations around debt and equity. So that all being said, we wanted to drill a little bit deeper to see what comment letter trends looked like, more specifically for life science companies. And as you can see, comment letter trends follow the same trend as overall companies in that they are on the rise as well. But for life science companies, key topics that the SEC tends to focus on are a little bit different. So as you'll see, number one on this list is R&D expenses. So what type of questions are being asked of companies? Questions around the tracking of R&D expenses by drug candidate, the nature of the costs incurred, manufacturing versus trial versus preclinical study type costs, internal versus external spend, accounting for multiple element arrangements, or capitalization of pre-launch inventory, or just to name a few. For MD&A, some comment is above. Investors are really looking for information that is more than just a flux of information included in the financial statements. So for example, if trial spend goes up period over period, investors really want to understand the why behind that. Did you initiate new trials during the year? Were existing trials expanded, and so on? For non-GAAP measures, same comment as above around requirements for GAAP disclosures to have prominence over non-GAAP, internal control over financial reporting, and of course, questions around revenue recognition with focuses on the interaction between ASC 808 and 606, policies around accounting for collaboration arrangements, principal versus agent considerations, enhanced disclosure requirements, and of course, gross to net adjustments. So as you can see by looking at this with the R&D spend topping the list, the importance of accounting for research and development spend can be very complex, and companies are being asked to provide information at an increasingly detailed level to be able to comply with accounting and disclosure requirements. So the other area that I wanted to focus on briefly is that of CAMs, or critical audit matters. As you can see, looking at this slide, which looks at 2023 data of life science companies audited by Big Four accounting firms, clinical trial accruals is one of the top areas of audit focus due to the risk associated with setup and maintenance of complex clinical trial accrual spreadsheets that have significant estimation inputs and lags in reporting of third-party information, to name just a few of the challenges associated with accounting for them. So this next slide really helps to illustrate this. When you look at excerpts from all of the Big Four, from public reports where clinical trial accruals have been called out as a critical audit matter, you see phrases like high degree of auditor judgment, subjectivity and increased effort to evaluate management estimates of progress to completion, complexity due to judgments and estimates of research and development expenses, where actual amounts are not known as of the reporting date, and significant judgments by management in developing the estimate of accrued R&D expenses. Given the risk profile associated with accounting for clinical trials in general, there's a high degree of scrutiny placed on this from an audit lens, and therefore it's important for management to get this right. Given the size and amounts involved, errors in the assumptions, methodologies, and spreadsheets can cause a misstatement to occur. So companies really want to be sure that they get it right and they have the right controls around the process to ensure that balances are fairly stated. Being able to uplift this process from complex spreadsheet to platform solution can aid in de-risking the process and provide management with more accurate accrual and forecast data. With that, I'm going to turn it over to Erin. Erin, I know that Auxilius is working with over 70 life science companies who are migrating away from manual spreadsheets to this platform solution, and thought maybe you could touch on some of the challenges that you're seeing with companies looking for a better way to account for this information.
Thank you so much, Dacia and BJ. Super helpful and always great to get your perspective, obviously, from the audit piece. I'm actually going to kick it to Sharon to kind of give a quick intro on what Auxilius will be talking about today.
Yeah, awesome. And thank you, Dacia. Thank you, BJ, and Erin for the segue there. So, I want to step back for a second and say, we've been, many of us, and I've looked at this list. I know a lot of you that are tuning in today. I see a lot of familiar faces and some new faces, but largely this industry composition has changed quite a bit certainly since I came into this space. What we see today is innovation at a high point. We have more clinical trials that are active today than ever before. Also, most of those clinical trials are being conducted by companies that are clinical stage that are not yet commercial. They are going to be first-time launchers, hopefully in the next year or so. What that means is the materiality. And so if we go to the next slide, that's kind of why we want to say we're here today. Auxilius is here because for the past 4 to 5 years, we have been absolutely purpose-built and fixated on solving the challenges that perplex not just auditors, as Dacia mentioned, given the auditor exertion that's needed to test these categories, the judgment that management needs to apply, the third-party reliance, which is always a high-risk area, and just the complexity and the data disparity and complexity of the data configuration. So Auxilius has been really dedicated to this because of the materiality and the risks involved. When we think about this industry today, the majority of clinical stage biopharma companies are seeing 70% of their overall cost category living in R&D expenses. That's why we're here today, because we want to talk about how can you get more accurate, more controls applied to your R&D, outsourced R&D expense accrual, and do that with a better level of predictability so that you can inform your CODM, who is making decisions around resource allocation, so that you can understand what am I on the hook for and what do I still have available to me to infuse future pipeline and infuse the next asset. So we're here to talk about, it is a material aspect. It's so complex to the overall balance sheet. So Erin's going to dive in and talk about what we see across around 70 biopharma companies today.
Yeah, thanks, Sharon. Again, thank you, Deloitte. So I think one of the key things for me anytime I talk to folks in this industry is this notion that you are not alone. And I think in starting Auxilius 5 years ago, we certainly had hypotheses on what kind of biopharma company would require a solution like Auxilius. And why would they need to require a solution, right? All having the same kind of foundational headaches. I think the key thing as we start is just to note that while there are certainly different priorities across these segments, a private seed stage, one study or pre-IND biotech obviously has different priorities day to day than the large multinational pharma. However, what has been so fascinating as a learning for us is that there are consistent challenges. We've put a couple of them on the slide, and then I want to really kind of dive into some of the challenges that we see that are pervasive across all organizations. I think verbalizing the challenges that all of these organizations face is the first step in saying, all right, how do we address each of these challenges? We see consistently kind of that lack of functional alignment and structured data across spreadsheets and systems creates financial close headaches. Now, what does that actually mean? Right? We'll start with saying what are the internal barriers to being able to meet this reporting threshold required? And it's not that you can't meet it, it's that it is challenging and it doesn't necessarily have to be. The internal challenges that we see is by definition, no matter what scale of company it is, there is a really strong reliance on Excel. And the reality is, like, you'll hear at Auxilius, we love Excel. My famous line, former investment banker, I love Excel. My husband and I live off of Excel. It is not scalable. It is not version controlled. It is not the best way to efficiently and accurately manage this material line item. The fact is, though, it is relied upon no matter the size of the organization. The other kind of structural challenge is that our big ethos at Auxilius, and I know I've had a lot of conversations with BJ and Tessie about this, is that because we're so reliant on an outsourced ecosystem, it becomes increasingly important to have our own view of what's happening to calibrate against what those vendors are reporting. Now, as accountants, it may not be native to think about forecasting as something that is at the forefront, that's somebody else's job. How do I make sure that I trust a forecast? How am I going to, defend the forecast to my auditors? The reality is it is important to have that multiple view, and we'll go into that quite a bit. Going back to the structural challenges, though, in all organizations, or most of the organizations that we see, there is a distinct challenge on getting the forward-looking forecast finance view integrated with that reporting out on what's actually happened in the study. So the initial point here is that there are just internal structural and tool set considerations that make managing your clinical trial finance and accounting pretty challenging. Now, on top of that, and we'll spend a bit of time on this slide, on top of that, there are myriad challenges that are sort of come out of having this outsourced vendor ecosystem. The reason that we put together this slide is to share with you what we are seeing on the ground. So as our customers are onboarding into our system, or as they're closing the month within our system, we are actually seeing a lot of these challenges play out in real time. So every example on this slide is actually something we've seen across our portfolio. The first one I'll talk through is just when we talk about reliance on Excel, let's just get super tactical here. There are so few spreadsheets that we see coming in from third parties that do not have at least one mistake. And it is fair to say that these can absolutely vary from rounding errors, right? Someone just truncated the pennies and maybe we're a $3 to $4 off on a $750,000 vendor comp firm. We also see fairly material things that are incorrect. Recently, we had a customer where the vendor comp firm file came in and the header on this quarter had not been switched from actuals, from forecast to actuals. So an entire quarter of that vendor estimate reported was missed in that life-to-date expense. So our system ingests that information. We have QA/QC checks that flag these things. But this is one of the things that our customers said is, if I took the vendor's confirm at their word, I would have missed a full quarter worth of actuals. The next big thing, and we'll talk about this a lot as we progress through this webinar, but relying solely on the vendor just opens up not only on the format errors or the Excel reliance, et cetera. But there is a lack of backup provided in some cases from that vendor ecosystem. Again, we'll talk about this a lot, but that investigator spend generally comes in as a one line item detail. And it is really hard to exercise that judgment to say, is this the right amount of spend on the investigator side? And this is pervasive across all of our customers. This is a big chunk of our clinical trial spend, and I don't have a good way of verifying what this vendor's reporting. As you all have dealt with on the investigator side, we are starting to benchmark trends around invoicing gaps. We're seeing it's trending towards the average 6-month lag as you think about a full trial. I'd argue invoicing starts out better than it ends, and you see that gap widen as you progress through the study. And so that when you get to that end of study reconciliation, there's a pretty significant gap between what we see in the clinical data in our system, or what you guys are tracking in your patient trackers, and what is ultimately invoiced. This creates really an accounting challenge as well. If your auditors are looking at what that gap is and that trend of the gap between your expensed where your expense life to date and your invoice life to date at the end of the year. I think finally, the audit trail, I think Tazia had said it best by quoting all of the critical audit matters. Auditors are having to exercise a lot of judgment and doing a lot of work to try to reconcile or repeat the work that was done internally and ensure that that all of the information is correct. Sharon, anything I'm missing just on thematically what we're seeing?
No, I think you have it right there. I think these four, like, and this is not exhaustive, right? But this is sort of what we see legacy issues as companies come in and we start to see what they have been dealing with. And it's on the top left, I think it's a concern around accuracy. On the invoicing gap, it's a concern around completeness. Did you capture everything in the period? Vendor reliance, I think all of us or anyone that's been in this industry for some time knows, like, third-party reliance is generally not something that is relied upon for any kind of financial report that is public. And then lastly, the lack of audit trail that Excel tends to, or workbooks tend to leave you with, is just lack of corroboration. So I think these are the things that, with this again, back to the materiality piece, this is what we need to kind of like fix that piece for, given the material nature of R&D spend today. So
great.
No, Erin, I think you got it all.
Awesome. Okay. So we've talked through the challenges. What I'd love to spend kind of the rest of the time doing, and then we really want to make sure that we're answering questions, is to share back with you what we're seeing across our customer base. And you'll always hear me caveat as COO and that we are sharing the trends. Auxilius as a software provider will never dictate the methodology that customers are using on our platform. The reason that we built Auxilius the way we have is so that we could facilitate any expense methodology that makes sense for your organization. And we'll talk through a lot of those considerations. I think what's really interesting, though, is that we do see that there's quite a bit of disparity in practice across the 70 plus biotechs, and then the 100 others that we've talked to in the last 5 years. And there are reasons that folks use the different methodologies. I'd say we've sort of taken a reductive approach in presenting this today in terms of, if you think about this as at its core, we think about this as the efficiency to accuracy trade-off. Now, there's a lot of nuance in there, and you could be wildly accurate on a straight line PO, potentially maybe never actually in clinical trials, but we'll pretend that maybe there's a world. But we do see that for some organizations, it may make sense for some of their ancillary vendors to take this approach for the majority of their non-CRO spend. This is certainly dependent on the materiality relative to the rest of the spend, relative to the rest of the P&L. The one, as we're moving to the right, we do see, as people are coming into Auxilius, that they are employing kind of a historical trend analysis to inform. We find that this is super helpful on portions of the investigator spend. So this is getting super nuanced, but as you're thinking about things that are not observable in the clinical evidence, it can be great to look at what your historical trend, your 90-day trend is on hospitalizations, for example. Historical trends as an overall approach is a challenging approach on clinical trials. If you think about the fact that the distribution of costs in an average clinical trial looks like this, and it tracks the enrollment and treatment curve, historical trends can be fairly misleading. Vendor estimate, full reliance, I think, and this stat is maybe 18 months old, but we polled 100 finance and accounting leaders. 40% relied solely on the vendor confirm. And that was, I mean, not to throw auditors under the bus, I think that was a guidance, right? You need to be reaching out to third-party vendors. And then we heard both from the audit community and our customers in that same poll, only 9% trusted what the vendors are providing. And so there is this gap. There's certainly a reason to get the vendor confirm. The question mark is, how much do you want to use that as a single source of truth without exercising judgment in a way that's verifiable by your auditors? Straight lining categories can certainly work. Again, this goes back to like straight lining POs. You're talking like getting a little bit more granular and saying, okay, at this cost category, maybe services, I'm okay, straight lining, maybe pass-throughs. We see a lot of folks straight lining pass-throughs just because they don't have better information. At sort of the like overall level, again, is problematic based on kind of the shape of the curve. Data-driven forecast. Again, I know that forecast word can scare some accountants away. I think what we mean by this is modeling the expenses so that you have an internal expense estimate to corroborate against that, what your vendor is reporting. It's important in this industry, as I've mentioned already on this slide, that when we talk about data driven, it has to be the data that matters to these trials. And that is your specific patient enrollment and treatment curve. We find that like the patient curves and the site curves are sort of the best descriptors of cost when we look at BVAs across our portfolio. The reality is while there are some choice CRO units that are not tied to that curve, as we all know, project management, you're getting charged for it no matter what's happening on the enrollment and the site activation side. The majority of costs are truly, and the majority of that like CRO pricing matrix is ground in expectations around patient and site curves. Now, on the right-hand side, I think, again, coming short of recommending methodology, which we don't do, what we've seen be successful from our customer's perspective is the idea of multi-source triangulation. So for kind of every data point that's coming in from your vendor, having some way at scale, and we'll talk about this, right? There are efficiency trade-offs if you're not doing this in software, but at scale, looking at the data points that are coming in from the vendor and having some other view on independent of the vendor on whether or not that makes sense. What does this actually mean, right? On CRO services costs, this is where that internal expense modeling, right? The idea that I expect site monitoring to track the patient enrollment curve. I know what the patient enrollment curve looks like. I have a very, very, very educated guess on what I'm likely going to incur on site monitoring. And even that like, we've seen specific examples where grounding in that internal expense estimate, you can catch some of these pretty significant errors on the CRO side, right? So we saw double billing on project management. That was flagged in our system because you can't have both those units occurring at the same time. Another one, a vendor was missing $500,000 of site monitoring costs, and the like model expected, somewhere around like $470,000. And that's important, right? You want to be able to expense that $500,000. Site monitoring is happening. There's patients actively being treated. Final one I'll just talk through here is, again, the vendor's going to report on investigator. We see quite a different variety of how that reporting comes in. But you actually, and this is one of the coolest things about this industry for me, is that as an accounting and finance leader, you actually own clinical data that can give you so much insight into what's happening in the study. That clinical data exists in clinical systems. And so you do need a translation layer. And usually that translation layer is like a bottoms up patient build in Excel. But it's ground in the actual contractual costs that you've negotiated with your vendor or directly with the sites. So these are ideas around how to trade-offs between methodology. One other thing I should note, and we'll actually go to the next slide, it is so organization dependent. We've talked about it already. Financial materiality. This is like up to you internally between you and your auditor on, does the vendor contract, the investigator invoiceable, that overall study spend, is it material? What are your auditors giving you in terms of guidance? We certainly hear sort of difference in opinion across the board. The next big one is availability of information. I think if there was, if this industry was perfect, you'd have this information at your fingertips in the same format every month without errors. And you could bet on it that it would get there day two. The reality is, and I really want to make sure I don't come across as throwing CROs under the bus. They got a day job, right? And they're doing their own rev rec and compliance with their reporting. And so a lot of this is just a factor of not necessarily having the right infrastructure within the CRO to provide the information. Now, when we talk about data, what you guys could say to me is like, oh, that's nice. I'd love the time to go line by line and compare my forecast to my vendor estimate. If you have one person who's responsible for, 2 phase 3s and you're launching 3 more next year, you may not have the luxury of doing that. And so there you're making trade-offs on that sort of efficiency and potentially accuracy. Obviously, I'm here as the founding team at Auxilius. So the final thing is, what automation do you have at your fingertips? Whether it's Auxilius or another tool, can you leverage that to enable maybe some of these sort of multi-source methodologies? Now, we won't spend a lot of time because I think this is just doubling down thematically on what we've talked about so far. But, I think we see a lot of benefit across the industry if kind of the data is integrated and you're getting single source of truth across your organization. So the fascinating thing to me, and I'll take one example that we haven't talked about yet, is that you bring up change orders across a biopharma organization, and everyone has a pain point around change orders. Your clinical operations team is like, I have to sit here and analyze, is this what I expected? Am I supposed to expense for these out of scope units that they've already, included in my vendor confirm file? The accounting people keep bothering me about this change order. It's not here yet. Finance is over there being like, I need to do my quarterly reforecast and I don't have the latest information. And oh man, I wanted to forecast at a fairly granular level. And now I'm going to have to map in all of these units. Accounting, same challenges, right? Is do I have these out of scope units actually incurred? When do I expect this to enter into contract? How should I be treating these? How many of those costs are buried in change notification forms or worse, emails across the organization? And so our view is that the more that you can integrate the same answer, that single source of truth across the stakeholders, the more accuracy you have across the entire organization. And there's also an efficiency side where people are not spending time communicating about the change order if it's all within one place within all system. What does that look like actually, right? It's basically saying everyone's working off the same budget. If you're receiving a change order, that change order is integrated into your budget and your forecast is automatically recalibrated. That up-to-date budget is showing up as the basis of your expense estimate. You're working with the latest information to book the most accurate accrual. And then as you are booking actuals within your system, your forecast is automatically recalibrating. So our view is that if you can have an integrated approach, ensure that all the functions are on the same page, it certainly drives not only accuracy but efficiency, and it hopefully gives folks time back across the functions. Before I move into kind of a deep dive around Investigator, I wanted to share one case study from one of our customers. And we're trying to do this a bit more to sort of highlight what we're seeing as emerging trends. I'm going to issue my caveat again, which is this may not work for you, but what I've heard so consistently is I wish I knew what my peers were doing. So thought this could be helpful as you think about your approach. This particular company is a public biotech 404B filer, 10 plus studies, and their accruals are due on day 3 for a 5-day close. I think that this is, as I think we can all agree, quite a tight turnaround for this accounting team. And so what they've chosen to do in our system, they receive the vendor forecast 5 days prior to the close. And so this is something that they've agreed on with their CRO. They get the vendor forecast that gets uploaded in our system. In the Auxilius system, they are comparing what the vendor's reporting from a forecast standpoint to that internal expense estimate. So their own internal forecast to book the most accurate expense. So they're comparing what I expect to happen versus what my vendor is projecting is going to happen. And then once they get the updated vendor confirmation post-close, they'll recalibrate that internal forecast. So, and this is one of those kind of themes I touched on in the prior slide, they are recalibrating the internal forecast so it feels more accurate when they go to the next month's or next period close. Now, on the investigator side, they are taking what is the clinical model built in Auxilius. We automatically are teeing up an EDC-based investigator expense life-to-date view. It is transaction by transaction, so they can see kind of everything that's happened from a visit and invoiceable standpoint. So hopefully helpful. I think that's one of those places if you want to learn more about kind of what we're seeing in terms of trends specifically around this, happy to share. Now, the final kind of section, and we'll go through this quickly. This is a lot of information, but we're having a follow-up webinar specifically on this, so I won't. So if you're interested, we can spend more time on it. But it's important to note that, and we've talked about this a little bit, but what we've consistently heard is that accurate expense estimation around investigator spend is the hardest. And that there are exceptions to that rule, right? You're a rare disease, you have 3 groups of 5 patients. You probably know exactly what's happening. You're probably pretty well integrated with your ClinOps team. As soon as any of those volume or any of those variables go up, it gets much harder to be able to accurately estimate these costs. So this tends to be kind of a pretty significant driver of volatility and variability in clinical trial expenses. And I've said this before, so I won't belabor the point. This makes it so much harder. The data coming in from the CRO is one line. Now, if you say, I would like the backup here, I have seen you get a 15,000 line Excel file and you don't know what to do with it because the data does not sum in the way that you would expect. And I think this is just a big challenge. It's a challenge for the CRO. It's a challenge for the sites. But so, ensuring that you have exercised judgment against this report is really hard if you're just taking that single line. So again, we try to show kind of the spectrum of what we see. And, we'll do a full deep dive on this. There is clinical data at your fingertips. You do have access to your site contracts. And this is sort of the spectrum, the sort of knowledge, the resource availability, and the need to do more granular reconciliation or build up on the investigator expense is very much, it is dependent on your org, investigator materiality, and then also therapeutic area. I have come across so few oncology biotechs that are not approaching this, leveraging EDC data, and then doing some analysis around scans, biopsies, some of those big ticket invoiceables. So again, there is quite a difference across the kind of the biotechs that we've seen in terms of the approach. I think what we see is that if you have the data, which you do by definition, right? You're running the study, and and you have a tool that can easily translate this into the financial implications, it is well worth it to take a look at that. Now, one of the things that, and again, I'm going to preview this today, and then we're going to do a full webinar on this in January. We get asked a lot on how do I think about invoiceables. So you have your schedule of assessments, you know when visits are going to incur, you know when the cycle sort of trajectory looks like. But there are so many costs in those site contracts that are listed out below the schedule of assessments. You are on the hook for those. And these tend to be the places we talked about, that kind of average 6-month billing gap. These are the places where billing gaps are the biggest, right? Because the sites are actually figuring out how and where they're going to bill these back. And there's a lot of other things that are going on, but this tends to be the hardest. And so we've issued some guidance just from what we've seen in terms of not guidance, but considerations in thinking through this methodology. Assessing, first step is to assess the volume and materiality of those invoiceables. What is my current materiality threshold? How is that study budget structured? How do I expect to be billed? We've seen $200,000 hospitalization visits come back to haunt folks at the end of studies. Then, second thing is segment your invoiceables. What are the highest cost and or frequency? What data is available to validate, and then determine your reconciliation approach. Love a good flow chart, kind of a decision tree on how to think things through. If you're seeing kind of question number 1, assess volume and materiality, you're seeing that they're trending immaterial, it may work. I mean, certainly can potentially work to utilize a buffer alone or with EDC data per steps 2 and 3. If you're seeing that it's trending material relative to the overall spend, then segment invoiceables across whether it's high cost, low cost, frequency, et cetera, and then determine the reconciliation approach. What we've generally seen is that folks will do quarterly reconciliation against their investigator payments file. If it is and then if it is kind of minimally, you're seeing a minimal gap between the overall investigator invoiced amount and what you have in your own patient tracker or within the Auxilius system, then potentially go to an annual reconciliation. Now, to close this, I think one kind of final thing, we are launching an investigator reconciliation product, which is essentially bridging that gap, right? What we've recognized is that 80% of the work is in coming up with your life to date investigator expense. That is a very time consuming effort, especially as you're getting in different protocol versions, as your site contracts are changing. But we see a big portion of our customers also then tying out visit by visit, invoiceable by invoiceable to that investigator payments report when it ultimately comes in. We do think that reconciling between the payments report and what you have in your bottoms up patient bill, it's important. Auditors are looking at it. They're asking you how to explain the gaps between those two things. And so having a view on that is pretty important. The other important thing from the accounting perspective is if you can identify those gaps, then you can improve your expense estimation approach. So understanding that hospitalization is coming in, how can you better anticipate that and estimate that as it's happening? So we certainly think that recalibrating investigator expense and payments is emerging as a best practice in the industry. It does remain a very manual process if you're not using a tool, but there are certainly ways, and we're excited to launch our view on that in the new year. So more to come on that. I think big takeaway from this section, just in general, is that this expense is big and material and really hard to report on. And so there are some strategies, and there are certainly kind of a variety of approaches that can get you a little bit more visibility on this side. And with that, I will turn it over to Sharon and the Deloitte team. to facilitate some Q&A. Thanks, everybody.
Thank you, Erin. All right. We'll go to our takeaway slide here in terms of some of like what we see as tactics for success, and then we can go to some Q&A. And so please, I want to encourage all of you, if you can, drop some questions into the chat. We have a few already that we will certainly get to. So, I would just say, like, as BJ, Tasia, and Erin have reviewed already, there are certainly some key reporting evolutions that are underway. And essentially, there seems to be, and there is, a call from the external market and from the regulatory bodies to go below the surface level from a reporting standpoint. And as we talked about today, and for the companies that have tuned in, largely that big ticket item is your outsourced R&D spend. And that's why we're really excited to be able to talk to you about that and dive into some of what we have found to be, working across customers in this industry, practical tactics for success. Again, if you're tuning in from a company that is clinical stage and you are maybe contending with that trade-off that Erin mentioned between what is efficient versus what is accurate, you probably don't need to squint to see the importance of this. When you sort of step back, you can kind of see there's a business efficiency gain, the materiality of the line items, especially investigator spend being that big volatile cost bucket within your clinical trial. And just that importance now of, as Deloitte and our team members from Deloitte mentioned, that that reporting element that we need to be aware of. So when we think about tactics for success, data granularity. So how do you get to that more detailed level? And this is really sort of unlocking not just the more accurate accrual, but also the ability to be more precise in your forecast. Second, finance and clinical alignment. So, this is not only just bringing those teams together so that you have a more accurate view on what's actually happening in your trial, but also freeing up their ability to focus on their core competencies, which are distinct. Data validation. So, certainly there's a lot of inputs that go into your forecast and your accrual, but being able to validate that and corroborate that is true, and having a single source within one view. Decreasing that reliance upon third parties is critical. And lastly, just automating with that control element and that internal control over your financial reporting. At the end of the day, the ability for any of you tuning in, if you are not already, but I would say, like, if you can free up that manpower to exercise judgment and focus on the core competencies of your team members who have the institutional knowledge in either finance and accounting or clinical ops. Those are some of the tactics for success. So we're going to switch over to questions here. We have a few. So again, implementing Auxilius in terms of maybe efficiency gains or headcount needs / refinement once implemented. Yeah, so in implementing an automated tool like Auxilius, what could a company expect in terms of headcount needs or refinement once implemented?
I can take that quickly, but just I think the reality is what we see across our customer base is we're not talking about staff replacement. I think that's I don't think anyone kind of really wants to talk about that, but I do think there's staff augmentation as you think about kind of critical points along the growth path. As in, I'm expanding my portfolio. I can no longer manage this with a couple of accounting managers I have, especially as I launch a couple of phase 3s. And then certainly as companies are thinking about shifting resource allocation, we're seeing bigger trend of these biotechs going commercial, needing to have the resources at scale, and kind of scaling that headcount when there are competing priorities.
Yeah, I think I like that point, Erin, a lot, because I think like being able to shift that institutional knowledge from maybe clinical accounting, finance roles to what would ultimately be a revenue or commercial finance role. I know we've seen that play out, and that's very important. The other, all right, so second question we have here. Certainly is, they said, we don't want to automate something if it's already wrong. So how does this tool align with a forecast or accrual methodology development consideration? So in terms of like change in risk controls, consideration for that, maybe that's for Tasia and BJ in terms of the control piece.
No, I think that's a fair question. I mean, a tool in automation is only good as the data that's coming into it. But I think this definitely eliminates a number of risks that just go into everything associated with manual spreadsheets, which add elements of human error to this, which always get attention as far as, making sure that everything's complete and accurate, that calculations are working how they're supposed to. And when they're very voluminous, it's just natural to miss something throughout all of this. So having a tool, I think, kind of helps with that process. The other thing too that has elements of risk is obviously a forecast, and not that the forecast is going away, but anytime that you have supportable information or data, and Sharon, you mentioned this too, as far as just being able to have all these data points and history to be able to make an accurate forecast, is always good, that you feel better about it, that it's supported with something rather than just an educated guess.
Absolutely.
I would, yeah, and I would echo what BJ is saying. I mean, companies really need to, especially if they've been relying on, a vendor estimate, for example, and that's not necessarily matching up the expenses, right, in the correct period. And so they're going to go to an accrual methodology that is just going to provide them with better information. They just need to spend the time to think about kind of what that needs to look like, based on the protocols of their study, as they kind of look to this, because to the point that somebody made, that you don't want to automate something that's wrong, right? Yeah. And so I think it becomes a very important piece as it relates to getting a platform solution, and then looking to automate in terms of getting that methodology and forecast estimates input into the system correctly, so that the outputs are going to give you very relevant data, not only for just accounting, right, but from the perspective of the finance group, from a forecasting perspective, and then also from your ClinOps group being able to interface as well.
Absolutely. Yeah. Thank you, Tasia. Thank you, BJ. And, as Erin mentioned earlier, certainly from the Auxilius standpoint, we do not dictate or force any methodology, but we will say, I know Tasia, BJ, and your team, being very informed on our platform, but also working with a lot of companies in this space, I would always just say, get the advisement from somebody and from thought leaders that understand what goes into a methodology definement, because sometimes you don't want to, again, you never want to automate something that is inherently wrong to start. So I think that's always a good place to start. Another question in the chat: how does the CRO input data into the software? Are they performing data entry into the software or uploading a file? Yeah, so we can speak to that, Erin and I. So the CRO is not directly inputting data into the Auxilius platform. Rather, files are uploaded via the spawn. And Erin, do you want to walk through the mechanics on that?
Couple of options on that, right? We can automate a vendor solicitation email directly to the CRO, getting that information, and then the software is reading the vendor estimate, and then there is QA/QC that's performed on top of that, as outlined in our SOC 1, given the pervasive CRO errors in this industry. Great question.
Yep. Anything else from the group? I'm looking here. I don't see any other questions. I know we're just a few minutes over time. So just want to, I think at that point, just thank everybody for spending the past hour with us today. I know it's a busy time of year leading into year end. Also an important time of year to kind of not only think about what do you need to plan from a regulatory perspective, SEC filing perspective as you start to close your books, but also think about how do we kind of become more strategic in the year ahead in terms of how we tackle the biggest challenges within our organization. So we would love to, I see another question in the chat. Certainly if there is interest in getting a demo of the system, 100%, yep, reach out. We'll make sure you have our contact information.
I'll take this one. I have not met a vendor that we have not been able to work with. So we can get the stats, but we work with all of the obviously all the big CROs, EDC vendors. We also do CMC. So we do a lot of all the CDMOs, some of the preclinical vendors, and then there is a long tail of central laboratory assay providers. All of those the system can handle. And then we love to demo the system as soon as you're ready to see it.
Yes, we will see you there. Well, I hope that everybody has really wonderful, happy holidays. You have a lot ahead of you, and I appreciate BJ and Tasia laying out some of the things that you need to be thinking about in your controllership, CFO world as you plan for the year ahead and your 10Ks that are standing in front of you. I appreciate Erin being here today and walking through, what we see across our customers, particularly again around that investigator spend, chunky, volatile material part of your R&D expense estimates. And we are definitely open to any kind of questions that you have around demo or want to get into details around our platform. But great group here today. It was a lot of fun, and hope you all have a wonderful rest of your day. Thank you so much.
Bye.